welcome to the weekly Livestock Market update on Brownfield. I'm Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Happy Friday and good afternoon to you, sir.
Good afternoon, Megan.
We are going to talk livestock slaughter and cattle on feed numbers today, which really will set us up for a conversation about what to expect and what to look for as we look ahead to the cattle herd. But to kick things off, let's recap what happened this week in the markets.
Yeah, Megan, this week on the cattle side, live fed cattle were 25 cents higher this week. Those feeder cattle markets were steady to $3 higher on the week. On the future side, October live cattle futures contract basically unchanged on the week, while the October feeder cattle contract closed down $5.20. We also lost on the choice box beef price this week, down $4.75. So we had weakness across the board in all those components in that choice box beef price. On hogs, cash barrels and gilts were basically unchanged on the week. The October lean hog futures contract closed down $1.60 this week, and the pork cutout value was basically unchanged on the week.
As we look, we're going to talk some slaughter numbers. Let's take a look at cattle and hogs, and then we'll talk year-over-year comparison.
Yeah, so USDA tells us for the week ending September 23rd, a run of 625,000 head of cattle this week. That is 7,000 head less than a week ago and 46,000 head less than a year ago. And on the hog side, a run of 2.537 million head of hogs this week. That's 6,000 more than we ran last week, but 18,000 less than a year ago.
But when we look at those year-over-year comparisons, no change from a week ago.
That's right. So down 4.3% in terms of cattle slaughter and up 1.3% in terms of hog slaughter year to date.
Livestock slaughter numbers out this week, and obviously we're going to talk beef and pork production, but we get to talk beef, cow, and heifer slaughter as well. Let's take a look first at where beef production is and how it's running compared to year-ago levels.
Yeah, so for August of 2023, 2.4 billion pounds of beef production. That's down 5.7% from where we were a year ago. And when we start to look at the year-to-date numbers, 18 billion pounds of beef has been produced year-to-date in 2023. That's down 4.5% from where we were in 2022.
How does that set up in terms of availability, whether we're talking exports or we're talking consumer purchases? Do we get a little concerned with this significant decline year over year?
Well, it certainly tightens the market up when you realize that that's 800 million pounds less beef that we've done year to date this year relative to 2022. I think exports has certainly been down enough to help loosen things a little bit. It reminds me to say, when we run these higher prices and given everything in the export market, it's not surprising we're seeing ourselves not keeping pace to where we were a year ago. But Megan, we're just starting in this whole less beef in front of us story, I think. And so we're going to keep getting tighter.
And that's not going to change anytime soon, especially when you look at where beef cow slaughter continues to run.
Yeah, that's right. So although we're down this year, year-to-date beef cattle slaughter down about 350,000 head. That's 13.3% below year-ago levels. But again, I remind us, year-ago levels were really high. And I don't think even with the reduction in slaughter we've seen, we're probably not holding back a lot of cows at this point in time.
We don't typically talk about heifer slaughter, but I do want to bring that number up briefly to talk about where it is and what that might tell the story of.
Yeah, so we've slaughtered about 6.7 million head of heifers year to date, which is just a 1.1% decline relative to what we did in 2022, which I think is a good indicator of not only is beef cow slaughter not falling enough to grow the herd, holding a lot of heifers back when we see what we're only down 1.1% in terms of that heifer slaughter number. So I think we have more time in front of us before we're going to talk about a lot of herd rebuilding.
And we'll talk about that a little bit more when we get into the cattle on feed numbers as well. Let's talk pork production first. As we take a look at those numbers, how is that standing year over year?
Yeah, so when we look at on the pork side, year to date, right at 18 billion pounds, which we're basically producing year to date the same amount of pork as we are beef. That's 0.8% higher in terms of what we've done this year relative to 2022. We're down 0.4% when we look at the August data that we got out of the report this week. So 2.3 billion pounds of pork, August of 2023, again, down 0.4. And that has a lot to do with weights that were down 1.9%, Meghan, when you look at the August data.
How much does that have you looking ahead to next week's quarterly hogs and pigs report to see how some of those numbers stack up to what we're seeing and maybe telling the story of pork production in the U.S.?
I sure don't want to second guess hogs and pigs report right now, Meghan, but it certainly sets the stage. You know, anecdotally, you can hear folks all over the board in terms of fewer hogs, fewer breeding inventory. I'm not sure what we're going to get when we get the report next week. I think it's going to remind us how hard it is to get breeding inventories to move lower, just given the amount of investment we have in facilities today.
Cattle on feed numbers out this afternoon. I think when you look at them, maybe at first glance, you're like, oh, those are some pretty big numbers, but not necessarily outside of pre-report expectation range.
Yeah, that's right. I mean, it just continues to confirm what we've been seeing and saying for much of this year. On feed September 1 was 97.8% of a year ago. That's right near the pre-report midpoint that we got for this month. And when you look at placements in August, they were 94.9% of a year ago. That is a percentage above pre-report midpoint, but still not a lot of new news there, I guess, is my thought. Certainly isn't bearish cattle prices given what we got out of the report today.
So as you take a look at the cattle on feed numbers, as we take a look at livestock slaughter and thinking about beef cow slaughter, what story is that telling us for one, the rest of 2023, but more importantly, what it's setting us up for in 2024? And before I let you answer that, how does drought and weather come into play for that story?
So, yeah, you ask the question that, frankly, I think is easier one to answer. Of supplies keep getting tighter. We're going to continue to, so we're going to have these back-to-back years of production declines that you don't normally see, and I might even look as far into 2025 and say, I'm not sure we can grow beef production a whole lot in 2025. It's just going to continue to get tighter. Higher prices for consumers, maybe higher cattle prices. I always hate to talk about new records when we're already at record levels of prices. To me, the only potential downside comes if consumer demand were to falter somehow. And we really haven't seen signs of that directly, although we certainly can talk about higher interest rates, higher fuel prices, government shutdown. I mean, there's a lot of things that I think I could point to that make me worried about the domestic economy, but thus far beef demand has stayed pretty strong at this point. So 2024 could be a really, really interesting year of more record high prices and extremely tight supplies of cattle and beef.
Where is there a point where we talk about record high prices, but that does not mean record high profitability? I think that's something that I have a conversation with consumers or my friends who aren't necessarily involved in the ag industry And there's always a point where we have to clarify, just because we're seeing record high prices, that does not mean that we're seeing record profitability for producers. Nobody's raking in the dough. But where do we get to a point where, or is there a point where prices, where we start to grow the herd? Because where does that balance find? Do we have that balance, or do we have that point somewhere in mind?
Yeah, so we will build the herd. If prices get high enough, somebody's going to be willing to take the opportunity to try to increase cow inventory and take advantage of higher prices. You're correct. We don't have record profitability today. We're getting closer as we look at 2024, perhaps, to getting to some of those lofty profitability levels again, but we haven't been there because of very high, well, a lot of high input costs, but we can tend to go to hay pretty quickly. Drought's not over. When you look at the current drought numbers for the top 30 beef cow states, we're still well above kind of the long run average for those 30 states in terms of what's designated a D1 or worse. So we're not over. Texas looks awful dry again in some places. So I think that's one of the things that's kind of slowing this idea of expansion. I keep saying, I think when you have these really high prices, you have maybe some folks who have been in the business for decades who are ready to retire. And so I think that's affecting aggregate supply response to an extent as well. And some folks may say this is a perfect time for me to get out of the cattle business. And perhaps, the sons and daughters that we would traditionally think about taking over those operations aren't as interested in a 40 to 50 cow beef cattle operation as they would have been in the past. So we may start to see some transition in terms of what the landscape of the cow-calf industry looks like in terms of size.
My next question was, does the rebuild look differently on the producer side of things, potentially?
And I think it does. I'm curious about where it happens as well. Are we going to move beef cows, or are we going to kind of keep everything where we are? I will say, don't forget, Texas is still down relative to what they would have had pre-2012 drought levels. So we've moved some cows out of Texas. But I think the look and feel is going to be different. The rebuild likely slower, especially slower than what we saw in 2014. I think the other positive that we don't talk about maybe quite as often is, if corn prices keep moving lower, it's going to help, I think, also push cattle prices higher. And we'll see what kind of crop we get in the bin, but perhaps it's not as bad as some would have thought just a few weeks ago. And I think that's also a play here.
Scott, as we wrap up today, obviously, next week's reports, cold storage, restaurant performance, quarterly hogs and pigs is going to be the big one. What is your slightly cracked crystal ball show in a quarterly hogs and pigs report? What are you watching for next week?
Yeah, so for me, it's number one, breeding inventory. Of course, farrowing intentions are going to be important in that report as well, but they tend to move around a lot from intentions to ultimately farrowings. Are we going to be down 1% or not? Some of the changes that we're seeing out there in operations, does that generate 1 maybe a little more percent lower in terms of breeding inventory? If we're flat in terms of breeding inventory, I worry that 2024 is another tough year, and only lower feed costs help the profitability line for producers.
Scott, it's always great to check in with you. We will talk to you next Friday.
Sounds good, Megan.
Cover Weekly Livestock Market Update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments, and for a rundown of what happens every day in the markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner.